Hello, traders. It's Tuesday, the 22nd of October, 2019. This is episode number 1622. Thanks for joining me today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Looks like we are risk on across the board on earnings. The theme today is earnings based. Um, we're seeing the cable take a hit on the uncertainty here of a no deal Brexit. We're seeing crude take a pop higher, 50 cents, trading at 54 even on the December contract, up 0.92%. Interestingly, the U.S. Treasury bond is up 17 ticks. The Nasdaq's also up on some earnings releases yesterday. Um, But overall, the sentiment is towards risk on. Allocation is towards risk. Again, a continuation of Friday's V bottom and then yesterday's grind up. We'll go over that in a minute. Um, what's driving us today again is really earnings. There's some stuff that's coming out of the UK Parliament, key votes in UK Parliament on PM Johnson's Brexit deal. Markets ponder whether it was enough time for the legislation to be passed ahead of the October 31st Brexit deadline. Would EU grant an extension? So that's an unknown for the market. US China trade deal optimism of a written agreement mid November helps to boost risk appetite. Again, we did get some earnings that have really pushed the NASDAQ up and have dragged the other indices up with them. And that's where we stand currently. Looking ahead at the market today at the calendar, there really isn't anything heavy as discussed yesterday. We do have a 2 p.m. Eastern, 2 p.m. Eastern. It's 7 p.m. London time. The MPs in the UK vote on withdrawal agreement bill. The market will be looking for that. We do have Fed's Kaplan at 1 p.m. Eastern, and that's really it. API crude oil stock change after the market closed. There's nothing else that's really significant. There are releases, but they're not massively significant. Existing home sales at 10. We do get the monthly budget statement at 2 p.m. this afternoon as well. So that's where we stand. In terms of what was expected yesterday versus what we got, the primary scenario, as you can see in front of you here, this is from yesterday's video. And by the way, I did a short trade wisdom segment, which was ripped out of the video and set up separately. It was tweeted out about avoiding losses in the market, and what happens to traders with regards to that. Um, but here's the primary scenario. The primary scenario is to pull back to where we talked about 94.50, 94.50, right in here. We were opening out of range, slightly out of range, expected an open auction, pull to 94.50, impulse up out of the range again, and then aim for that 3009, 3010 area of before the market turning down. Here's what actually happened. We push up, pull back. Where do we go? 94.50 on the dot right here before the market starts to push up and it gets to 3,750. It comes up 6 ticks short of the upwards target of 3009, 3010. We're currently trading 3010. Yesterday's market was quite grindy. The move lower was actually quite detectable. This high was quite detectable. It occurred on pretty poor delta. It was just obvious from the order flow that, at least to me, that the market's really weak on the test. And so looked for a short rotation into this 29.94.50, and it hit it right on the nose. Again, I always front run my levels by a couple of ticks or so, depending on the kind of environment that we're in. And that was kind of a rare setup from the high to the low early in the day. And then from there, it was just grind upwards, open auction grind all the way up. And you can see from the profile, which was gives us a normal variation day, you can see from the profile that the market thoroughly traded the entire range with a point of control up near the upper quartile of the range with a fairly, look at that high, look at this next to high tick here, big step down. The expectation is the market is likely to continue higher in the extended trading hours, and that's exactly what we got. So as we push up here, as we come back in, again, we have earnings that were coming out and so on, news. The expectation is that we would continue to grind into 3009, 3010. And what we did actually is um, spike up at about 7:30 my time last night. So it's overall it's accomplished its purpose or its anticipated move. Um, Not seeing news on that event. Some a foreign ministry release, a vice foreign minister release of progress being made on talks. So that's probably what that is. That came out at 8:20 my time, 9:20 p.m. Eastern. Markets pulled back all the way, but overall the overnight session shows pretty light volume again. Sorry, pretty light volume again. But we are above yesterday's range, above mid, above VWAP, with a pretty blunt profile up here. Pretty active price discovery all the way through. The market has already tested the SOC on that news and is holding steady higher, expecting this to be a grind up from here. Not seeing a good argument for the contrary. I believe that what we see here, the context of what we see here, is that it's likely to continue grinding up and shorts are likely to continue feeding it. So that's where we stand there. Taking a look at ctbookmap.pro, looking at what this the overall action from yesterday has been. We did have some liquidity that's left over. It looks bluish here because it's paying attention to the higher liquidity available before the close yesterday. But there was a bit of liquidity left there, and overall the market didn't really accomplish much in terms of testing high liquidity areas. We just had a bit of a collision at 3012 and have pulled back. And overall, it's not looking um, very well stacked. Now, remember, I'm looking for liquidity to match areas of interest. My areas of interest are those gray bands, the gray bands that I call stock zone areas. That's a trademark name to match up with liquidity that's lasted a while in the book, and we get those at 3015. Remember, above 3009, 3010, the next key test area expected is 3015. The high overnight is 3014 and a quarter, and we still have this liquidity up here. I expect that the market is likely to tangle with that on the open and pull back. 3020 is the next key area. It's typical that we see a fair amount of liquidity every 5 points or so. As you can see here at 3,000, of course, 29.95. If I pull up 29.90, I expect to see a little bit of liquidity there as well. Oh, not really. It's a little bit lower. 29.90 is right here, and the liquidity is at 29.88. Just underneath there. But in general, we see liquidity every 5 points or so that coincides with the option strike price. So you can see there's quite a bit offered above. versus what's available below. Generally, the markets move towards liquidity. We'll see how that plays out once the market opens. Let's take a look at what's expected for today and what has been set up for. So we've been in this so this is a composite profile of this whole balance area. As the market kind of trades around itself, we start to look at a micro composite and we start to look at balance in the region. I'm going to extend that micro composite to the right, and we see the volume fill in up higher with 29.97 even being the point of control, and we are above there. So with that being said, we'd have to pull in the bigger areas to the left to see where the heck we are and where we're headed to next, where we're likely to be headed to next. Again, 3015 is a big area up here, and I'm expecting that to get tested at some point today. I'm expecting a continued push higher. So we are opening outside of the most recent balance zone with a peak at 3008. We are coming into the upper of the range of September, the balance range of September. So overall, I'm expecting this to be a bit of a grind up. The market's likely to open in an open auction. I'm looking for some reversion back towards 3008. I'm looking for an impulse up, take out the overnight high, push into 3015, the liquidity consolidate for a bit, and then can start to squeeze up into the 3021-22 area. That's the primary scenario. I expect a continuation of the action that we saw yesterday. Okay. The secondary scenario, looking forward to open, strong, push in, grind into 3015, turnover, impulse down, bounce off of the high, and then seek to get back into 3004 and then potentially even lower before it bounces back out. That gives us a rest day, a bouncing day. The caveat with this is it's Tuesday, and Tuesday tends to be a higher volatility day. Monday kind of sets us up with some balance, and then Tuesday breaks the balance and pushes through. So I'm looking for, a little more volatility today than we did yesterday. Yesterday was a bit of a grind up, as I talked about. So that's what we're looking at overall in terms of the expectations. Because we're opening out of the most recent balance, there's an elevated probability of an open that involves a test and a drive. So just be aware of that. Be cautious of that. We'll see how it plays out, but in general, I expect what I'm showing here to be the most likely scenarios. Hopefully you're doing your homework. Hopefully you're preparing yourself for the markets before we open. Sitting down and just going off your gut is not a good long-term plan. You might do well in the short run, but even long-time pros have a hard time with that approach. It's best to come in and just read what the market has done and ask yourself, what is it likely to do next based on how good of a job it's doing already. Good luck today. I'll catch you tomorrow. Take it easy.